Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Connon.
This is a volatile puppy here, isn't it?
And Dennis Thick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Friday, August 11th show of Benzinga's PreMarket Prep. I'm Spencer Israel, here with Joel Connon and Dennis Thick. We got a lot to discuss today. We were going to talk about just the fear in the market and how the market's down and some earnings, but I have a feeling that won't lead the show because we just got news from a few minutes ago that dry ships, first they were halted from news pending, and that news is now out. They are conducting a $100 million offering, so I imagine we'll want to talk about that. We also have a guest at 8:35. He's Todd Sullivan, general partner at Rand Strategic Partners. But Joel, how are we doing in the S&Ps? And then I imagine we'll get to dry ships.
We're down, but not down as much as Dennis thinks we should be. We're trading down now 4.5 points here. We are pre-market low of 24.30 and a quarter. I got a target on the downside this morning. Your first downside target is 22.50, and there won't be any upside in this market until we clear the closing price of 37.50, pre-market high right there as well at 38 even. Crude oil down 23 cents, 48.36. Tried 50, didn't quite get to that 50-40 level, and then here we are closer to 48. Gold and silver trading up in tandem. Gold up 370 at 12.93.90, and silver up 5 cents at 17.12. Dennis, I want to know what stock you're going to put in your portfolio today. Is it going to be J.C. Penney or dry ships?
Yeah, no, none of the above. I'll take none of the above for 500, Alex. $3.96 at JCPenney this morning. Again, absolutely smoked. Dry ships, though, you know what? Okay, so I don't know this news here. Did it come out of the halt yet? Did we come out of the halt, or we're still halted?
Good question. I think we're still halted.
Let me take a check here.
I think it did come out. Well, I saw some over-the-counter trades. I'm not sure if it is out of the halt yet, but
I think
give us the news here first on dry ships, and we can just be done with it and not talk about it again, Spencer. Because I hate dry ships.
$100 million private placement offering.
Okay, yeah, but it was weird. It was like a rights offering involved with that. Like I read the headline too, and then there's some 275 thing going on. It literally just came out. I read it for like 10 seconds. So
also,
I haven't had time to actually dig into what the hell that means. But anyways, it's not your typical reverse split. So I guess that's good news.
No, and I think they're terminating a stock purchase deal with the CEO as well. But yeah.
All right, there's a lot of news here on dry ships, and I'm not sure. I don't think it's out of the halt here yet. So, but it's not your typical reverse split, so that's good. Other than that, who knows? Let's just see. We'll see when the dust settles here and this thing comes out. I think it's going to get bid up. It's actually looking like it's going to get bid up here. It's still in the halt right now, and I think it's going to open higher. Believe it or not, dry ships could get halted and actually could open up. So it's going to be interesting. Okay. 275. That 275 price placement is going to maybe put a floor on it. So I think this thing could open 275. Let's see what happens. Moving on.
No, I just want to say one thing. That $100 million investment is going to be worth $25 million soon.
Next week. That's actually could be worth a lot more. You know what? I don't know. I think this thing could have a short squeeze right now. So we've been seeing short squeezes in this market. Maybe we should talk about short squeezes. I think there's going to be one in dry ships today. So first of all, I think with this news, you're going to see a little bit of a short squeeze in dry ships. Would not be surprised this thing blasts off in orbit because of that. But what I also think here, and if you look at the other ones too, like, just seeing, dry ships in the halt, but tops here, TOPS just blasted off too. These are, stocks that obviously run similar operations and similar financing schemes, I'll call them. It's up 18% here right now. So it's getting a lift on here. There's a few other ones too. It's always tops that I look at first that really moves with it. So, if you got some other ones there, chat, I forget them all. Let us know. But I think dry ship's going to have a little bit of a short squeeze here this morning. Moving on to other short squeezes. Have you seen Weight Watchers, WTW? Because this stock is like the next, internet stock or something they're pricing it as. It was $15 a quarter ago. It's $47. Weight Watchers. Oprah Winfrey, don't bet against her, man. We said it.
You said that a long time ago. It is trading down 17 cents at 47.42. The daily chart, it's just taken off since earnings. So, I mean, I could go back and get some technicals for, going back long term. But I would just, if you're trading this thing, just keep an eye on it. Yesterday's high, 47.90, as well as that mark of 47.59. I will say, you had that big bump after earnings. The volume is starting to dissipate a little bit. You traded nearly 10 million that day, traded 2.5 million yesterday. So maybe the shorts are out or the buyers less enthusiastic, but volume has tapered off. That could be a sign that the buyers are none.
In any regard here, Weight Watchers just been flying in 12% short interest, but I think there's got to be some short-term traders in there that are just scrambling here too. I mean, this has just been unbelievably and it's telling you the trend is your friend. I mean, we talk about that on the show a lot here, and you can hate a company fundamentally, but when it's in that uptrend, it's hard to fight that tape, and that uptrend is really capitulating, upside capitulation here right now in the last little while. But when the dust settles, I don't believe a Weight Watchers is a $47 stock. I think its home is much lower than this. So I'm not coming here shorting it because short squeezes happen. You have locate issues. All kinds of fun things that can take you out of a position on the short side. There's always, a lot of risk on the short side there, which is a consideration. But Weight Watchers here, you can't argue with that tape, and it's hot as of right now. I think it's going to cool eventually here, though, and somewhat sooner than maybe everybody thinks. Jumping over here to the other short squeeze I was talking about is Viacom, VIA. And you didn't think I'd go here probably, chat or listeners there, but check out VIA. It was up 3.5% yesterday. VIAB is down. This is the same company. VIA and VIAB are the same company. The only difference is the voting rights. But the other big difference is a structural thing. VIA is thin. VIA sometimes becomes hard to borrow. VIA sometimes is prone to locate issues and therefore short squeezes. I think that's what you're seeing here in VIA right now. A lot of people probably have this pair on because Viacom, got hit hard after the earnings, so they hit them both. Well, VIA is almost back to where it was prior to that report, where VIAB is down 15% from where it was. You saw this spread just blow out basically 10-12% in the last 4 days. This isn't, like some, relationship, these companies are related. This is the same company. This is the same company. We got the one stock, it's just got the voting rights going straight up yesterday, and VIAB still going straight down. That's a structural problem in the market, I believe, because I believe it's a locate issue, and probably a lot of people can't get the locates and they get bought in. Or they, are just getting squeezed, and people have that on, and they're like, what's going on? This always works. Well, ARBs is not working right now. Your basic arbitrage in the stock is failing right now. That's concerning.
You want to hear an interesting fact here, Dennis, and you being the market structure expert of the world, do you know what the difference between the two is structurally?
Just voting rights. That's it.
No, there's something else.
What else?
The VIA is quoted in nickels only.
Oh, I hate that too. The tick size pilot. Yeah, it's true.
Yeah.
Joel, but yeah, I don't like the nickel. I don't like the tick size pilot whatsoever because I think it's, not providing more liquidity into the markets like they thought it was going to. And it's annoying because I got to pay up a nickel for something. So, and then you see a lot of people trying midpoints, and, I use PDQ to try to get midpoint fills, and PDQ comes pretty, this is a different venue that you can use. These are different, routers, IEX is a midpoint too, a lot of other things have midpoints as well. But these are tools available more to the professionals. The poor retail guy is just stuck paying another nickel. How does it benefit him if you don't have access to midpoints? So your institutional traders will have access to midpoints. Your prop traders have access to midpoints. A lot of your retail platforms don't give you access to midpoints. And that's terrible, terrible for the retail guy. That's why I think this tick size pilot is just an epic fail. I'll say right now, epic fail. That's what the tick size pilot is.
Okay. I mean, I wonder, we could do some digging on that and when the symbol restriction, the tick size started, but that's something we can definitely look into.
Jumping over here to the earnings parade. Everybody thought we were going here first, but we're 10 minutes in the show and we haven't even mentioned it yet. NVIDIA, the disaster of the day. On a blowout report that's showing you that the tide has turned. Because if NVIDIA would have reported this quarter 3 days ago, it would probably be trading at 180. but the tide turned yesterday. The bears took control yesterday. So NVIDIA is a victim of reporting on the wrong day. The media will try to find a fundamental reason for you. I will tell you they are a victim of reporting on the wrong day. Everybody was looking to take profits last night because everything got hit yesterday. This thing got up over 170 and people were like ringing the register. Thank you very much. Get me out of my NVIDIA here. And they kept selling all night long. And now the stock is down 14 points. Spencer, give us the results for NVIDIA.
Yeah, I'm wondering if this has anything to do with just the fact that Trump said our military is locked and loaded and ready to go against North Korea. Anyway, NVIDIA Q2 EPS.
Just a bet.
Q2 EPS $1.01 versus a 70-cent estimate. Sales of 2.23 billion versus 1.96. So very good Q2, and they see the Q3 sales at 2.35 billion, well above the 2.13 billion dollar estimate. So good guidance and good earnings, and yet you're right, Dennis. Picked the wrong day. I think Trump's dragging the market down today, or the rhetoric is.
Totally picked the wrong day. I mean, S&P futures for some reason are only down, 2 points, which is mind-boggling to me because I'm seeing a lot of stocks in the pre-market. I mean, my down filter is littered with stocks. So one of two things are going to happen. These pre-market stocks that are trading down the pre-market are going to start catching bids, or the S&P futures are going to start rolling over. But it is out to lunch right now. Anyways, that's a side story here. NVIDIA getting killed, a victim of market sentiment more than anything here. Sentiment turned yesterday. That's why they're hitting it on a good report, folks. Don't let the media, try to find another reason for you. It is simply a matter that people want to take profits in things they can take profits in right now. And there's nothing better to take profits in NVIDIA, which has been one of the strongest stocks this year.
All right. We see the trading action here down $14 at 150.70. And, we're really not getting a lift yet. This is where the stock came down to initially, the pre-market low, right where we are right now. I mean, you could use half and whole numbers if you want. You do have a daily low to keep an eye on under 150 at 148.68. But I would just keep an eye on the pre-market low for continuation. You could have one of these where you continue south and then maybe come back up through that opening print. But a lot of air in here. I'm just looking here, and Andrew left shorts ahead of earnings. I mean, this is like news. This guy's been short the stock since like 110, 120.
Well, he covered it probably after he disclosed that he was short. I mean,
oh, I got it.
Loving Andrew. I love Andrew Left. I mean, they makes bold calls, but he has got a license to print money, man. Just imagine being him, and his power of influence. He shorts the stock. Then he issues this report that I'm short the stock and I hate the stock for whatever reason. And it falls 10%. I mean, he's up 10% before he even starts. He's automatically up 10% just by disclosing it. And, so it's and props to him for creating this for himself, but, there's nobody to talk a buck more than Andrew Left. And it's very influential. I mean, Icon does it. All the big guns do it. But nobody's more influential in this market than Citron. And there you are, so here it is again, and he's talking and it goes down here and he's making money again. Now, this is their earnings report, so it's different. He's shorting ahead of the report. But when he comes out and discloses that, it scares people. People believe Andrew Left, is a genius. And, maybe he is. I think he makes some very good calls. He writes some great reports, and he's very bold. And he's a great speaker, too. We've had him on the show. Great speaker. But he's got, a license to print money just by his own power of influence. That's nice to have.
Yeah. And AMD has been just getting pounded since it had its earnings beat. That stock went up as high as $15.65. That was a 10-year high. And now you're down 40 cents on this news at 11.72. Filling some gaps. I'll just alert our traders that you had a low at 11.62 back on June 19th. So good tell in AMD. The way they reacted off their earnings report for traders of NVDA.
Get your fingers ready. Get your fingers ready. Dry ship set to resume at 8:30. Get your fingers ready.
8:30. Okay, that's going to be exciting. You know what? That 275 price, this thing's open over 275. I'll put the bet out there right now for you, Joel. We're going to open over 275. I think we could see well over 275 today.
I am not going to stoop that
Dry
low.
ships long is going to be rewarded for once in their life. Tops is now up 63%. We gave it to you at 145, guys. Tops is now 65%. It's up. These things, this is a placement offering that 275 is going to create like a floor. This thing go $5 today. I think
$5?
$5 today. I'm not, that's obviously.
Nah, no, I don't know. I have no idea.
I think it opens at 3. Where's the over? I'm setting the over under at 3. I think it opens at 3 and maybe goes higher. Look at this, some bullish dry ships. For once in my whole life, I've actually bullish dry ships right now. Probably in a week, it's probably back down to where it came from. But short term here, this is going to scare the hell out of the shorts.
All right. Well, hopefully, Jeff Goldman, my buddy's been trading Bitcoin. Has been long this thing forever. Hopefully, he has caught it today. But 275, when Dennis mentioned as a magnet, when now it's going to be a floor. We'll see what happens. I mean, let's move on. I don't even want to talk about it.
All right, not talking dry ships anymore. Okay, so this just goes to show you here too. Nordstrom trading higher on their report. The entire after hours session, it's down. It's down. It couldn't hold it. I mean, these retailers, what a disaster, epic disaster yesterday. Macy's reports an okay quarter. Kohl's reports an okay quarter. They absolutely murder these things. They don't care. They don't care what these retailers do. They're selling them. These big box stores. Dillard's just murdered yesterday. Like we were saying, real estate play, and people are saying, they're tweeting at me, oh, it's easy to call after the fact. We were calling this before the fact. We were talking about Dillard's and the ridiculous run up. And I was saying when the dust settles, it's coming back down. I don't know when it was going to settle. Well, it's settled now. And, jumping over to Nordstrom here, they had the idea that they might take the company private. Nothing's materializing from that. It's taken out the floor of 46. Give us the numbers, Spencer, but they're not good enough. And it doesn't matter what they would have said. It wasn't going to be good enough. What are the numbers?
65 cents versus 64 cents. Sales of 3.79 bill versus 3.75 bill. They did raise the low end of their fiscal year outlook, the EPS that is. But like you said, it doesn't matter.
Doesn't matter. That's the bottom line, is that they just hate these stocks. I mean, that Macy's report, there was no problem with that yesterday. It didn't matter. They don't want to own them. And, when it popped in the pre-market, and we were saying, I said, on the show when Macy's was up $1, I said, live, I think it's going red. Well, it not only went red, they pulled the rug right out from underneath it and made a new 52-week low. So Macy's going sub 20, it looks like. It's down here again this morning. Kohl's, it's just a mess. I mean, Kohl's is up from the lows there. Yeah, they had a little short squeeze. Yeah, they had a little bit of fun there for a month, but the fun is over. Party's over. That's a new low. When stocks are making new lows, I say you got to go. I want no part of Nordstrom here now either. When it goes down and they're raising guidance, problems. They just are saying that people are not buying stuff in these physical stores anymore. And they might be right.
All right, you just mentioned like 5 stocks there, but I'll just stick with
Go to Nordstrom.
I'm like going to Macy's. That was like 52-week low. Yeah, boy, oh boy, you are quick. Pre-market low was right where we're trading right now. That low tick of 44.26. You won't see any of my bids out there until at least 43.40. And that was your low on June 9th. And you had that was after the rumor came out of, that they were going private. But if that 43.40 is taken out, folks, look out, because you have a gap down to 40.62, and that is a huge area to fill. So under 43.40, look out. Trading on the lows of the pre-market session. For Macy's, I would just say that old low, the former low of the move, was 20.85. So keep an eye on that. That will be a potential swing level, but right now that's trading lower in the pre-market too by 26 cents.
Snap report. Give us the numbers, Spencer. This thing was snapping all over the place last night. What's the numbers?
Fast market. You caught me sleeping there for a minute. Q2 EPS 36-cent loss is what they reported. Adjusted EPS was a 16-cent loss. Sales of $181.67 versus $186.22 million. Here's the problem. Their the number of user growth is just not a thing with Snapchat. Apparently, their Q2 DAUs were up 21% year over year, but their total new users, they had I think the number was 7%. What was the number? I can't find the exact number right now, but it was you're right. They added 7 million daily active users in the quarter. In the same quarter last year, it was 100 and some odd million active users.
They're not growing.
And they added 7 million last quarter. So they're just not growing. Facebook just completely ate them up.
So they're not. So here's the issue here. They lose a hell of a lot of money. They're not growing. And they got a high valuation. Or no, you can't even value because they don't make money. I mean, like we've been saying all the way down, I think this is a single digit stock. Now, one consideration here is that this thing has been murdered, and it's been straight down. I was showing a little bit of life. If it can hold the low, if it can hold the 1190 that it met on August 3rd, you can have a technical setup for a double bottom. If it doesn't hold 1190, and I know it's taking it out pre-market, but pre-market is different. You get the real players coming in the regular session. If it takes out 1190, it's a world of hurt. If it can hold 1190, and you got to give it a nickel or a dime. You can't say, when 1185 it took it out. Say 1170 starts going through that, then it's in trouble. But if it can hold there, there's an opportunity for a technical bottom and a short squeeze. That is all this will be, is a short squeeze, in my opinion, though. I think long term, I think Snap is a single digit stock or less.
I was gonna say, do you not?
How do you be less than single digits?
do you not think this is like a Facebook moment? Right? Remember, like if you look at the Facebook chart, you can remember they kind of got killed there for a minute there.
I don't use Snap, so maybe I'm biased against it, but
here, I mean, Facebook went down.
You said Facebook's eating their lunch.
Well, Facebook, I'm saying that Facebook went down after they got crushed after their IPO, and look at the run they've had since then. I'm just playing devil's advocate here. Okay. I agree with you, but I'm just wondering if they're having their Facebook moment. Then again, Facebook is destroying them, so who knows?
I think they're having their Facebook moment, and their Facebook moment is bad for Snap.
Did you guys hear what happened during the earnings call or the conference call? One of the analysts called it mishap instead of Snap. Did you guys see that at all? I saw it running across on CNBC. Mishap. Dennis gave you the number 1190. Currently trading at 1221. I mean, shorts have to cover sometime. Pre-market low 1131. That was made immediately after the point, but I like that 1190. I think some of these stocks, was it like Blue Apron, even though that had a bad report, they hit it off the open and then they ran it back up and ended up coming back down. But 1190, good number there, Dennis, in Snap.
Okay, JCPenney, your other disaster of the day here. This thing's down 25% here now. They hate retailers. They hate this one. They hated the retailer. They hated JCPenney before they hated retailers, the big box retailers. And, now all of a sudden, JCPenney is not only hated, from, now the whole industry is hated. This thing, we go in the stores, we've talked about it before. They're a mess. I'm just JCPenney. I can't say enough bad about it, so I'll just stop talking. Spencer, give us the numbers.
JCPenney Q2 EPS 9-cent loss versus 5-cent loss. Estimate sales of $3 billion versus $2.84 billion. Comps were down 1.3%, and for the fiscal year, comps will be about flat. Their range is down 1 to up 1%, so pretty much flat. And they did reaffirm their outlook, which wasn't good to begin with. So, whatever.
I'm just seeing huge sellers in the book. Like somebody in the pre-market, I put this in perspective. Somebody's selling 227,000 shares at $359 in the pre-market.
No way.
One of the biggest pre-market bids I've ever seen, and it's down 25%. They're like, get me out. Like there is just institutions that are dumping this thing. They are like, this is over, and he's gonna get done. He's starting to get he's getting pecked away right now. So he's getting pecked away. Look at it go. I just saw it. Somebody just bought 220,000 shares. So some other institution, or there's a whole bunch of traders. That's just people covering. And all of a sudden it's, there's more sellers again. But this is a mess.
That just printed all that stock right there?
They just printed it all. It's traded 8 million shares, Joel. This thing's trading like 100,000 shares like it's, hot knife through butter.
Dennis, you made a good call here. I'm not talking about JCPenney, but on the pre-market show, you were saying, man, these spoos are just down. And you said they should be down more because
so I didn't make a call backwards.
You're back off. You got it backwards. I'm fading you.
The stocks though are coming up, and the stocks were beat up here, and the stocks are starting to come back here. I mean, we've been beat up all morning here on a lot of stocks, and if you look, there's a little bit of a comeback trail here happening. Apple just went green. So they are fading the NVIDIA numbers. So you're finding buyers come in here now, actually, into a lot of different stocks that they were not coming into here before. So, it's interesting here because this market obviously, is you think logically speaking, the market's going to get killed with NVIDIA getting killed, but they're buying the other tech stocks even. The Qs are trying to go green here. I mean, NVIDIA's down. If you would have said NVIDIA was going to fall 8%, $13, and the Qs were going to be flat, I'd say that's impossible. It's not impossible. It's happening right now. Microsoft's trying to go green right now here. You just have a lot of stocks here that are saying, forget it, I'm going green. So, they're bucking the trend. And even AMD itself, I mean, AMD and NVIDIA have a very strong relationship to each other. AMD is only down 2%. So it's holding on here too. The one thing is AMD was beat up a lot more than NVIDIA over the last month. NVIDIA was trading up near the highs still, and AMD's significantly down from its highs. So, maybe NVIDIA is playing a little catch up here, but NVIDIA is not bringing down the overall market, which is good. That's good news for the market, showing some resiliency.
Trying to go green, and if we do go green, and if we do take out that pre-market high 38.50, the close 38 evens, the pre-market high 37.50 is the close. Folks, I can honestly say there's no resistance in this thing because at least a 48.25, and who knows if we're going to go there today or not. But when you come down through areas, and we talk about this, the way we took out that vacuum when we took out that 59 even low, there's nothing. I mean, there's a lot of air in here. I'm sure there's a lot of trap buyers looking for a pop to get up, but I like it, man. I mean, I was getting bored doing the S&Ps, and now I'm not going to be bored anymore. But Dennis, let's do we cover the earnings? Did News Corp have earnings? Was that last night or?
Do we want to waste time on News Corp?
No. Okay.
I don't care what News Corp said. Personally, I don't care. So we've pretty much exhausted the major earnings reports here. I had a couple other stocks I wanted to talk about here, though. You know what was catching a bit yesterday? And it's one that I never considered up till a few days ago. Virtue Financial, your high-frequency trading firm. It was up yesterday. And people are like, why is that up? Well, volatility's climbing. And think about it. Traders make more money when you have higher volatility. Virtue reported a terrible quarter because volatility was so low. The VIX was so low. So they killed the stock. But now you're seeing that stock fly back VIRT because it's a VIX play. I'll say VIRT is a VIX play. When you see the VIX climbing, VIRT is going to, I think, start trading with that. And people haven't realized that, but it's a total VIX play. Virtue Financial is going to do better during weak markets because they make more money from the arbitrage opportunities.
Do you think that they high frequency trade their own stock?
Probably. Do they make? That's a good question. Does Virtue Financial make markets in their own stock? That's a question. Let's always ask Dougie there. Dougie Large, who's the CEO there. He owns Florida Panthers too, actually. So the
all right. Look, I mean,
VIRT is the symbol fuzzy I'm talking about.
I got it. I always do VRTU, and then you get mad at me because I give the wrong prices. But it did have the report, man. If you were keeping your eye on your charts and you were looking at a former low that you had on the issue on the dailies of 1460, then that's exactly where the stock went. 3 days ago, you hit 1460 right on the kisser and then bounced to close end the day at 1550. Good up day the following day, just kind of slowly climbing here. Folks, it's trading above a double top here, and it's also trading through 17. So I don't know. We're clearing out some sellers there. I'd like to see it stay above 17 and maybe able to get it cheaper. If it comes down to that old double top, maybe 1670 bid here. But things are pretty open up to 1735. And then, boy, a bunch of highs. Under 18 from 1760 to 1775. But this is a good one to keep an eye on. VIRT.
Dry ships just opened, just reopened. We're 365 here right now. I did not see the opening tick. 395. Did I say $5, guys? Did I say $5 live on the show? It's 450 right now. 450. We're gonna see $5 in the pre-market a minute after it opened. Where was the opening print? Did you get the opening print, Joel?
Yes. Well,
I should have put a bid out there. It's gonna
boy.
trade $5 for $5. I got it. Look at that. Look who called $5 at least. I should have took you on that bet.
What bet? I didn't make the bet.
510.
I'm seeing 491 print, 507 high on mine. Dennis, how did they get a 2 1/4 tick in there?
No.
That's what it says.
Did they?
Yeah. I got 801. It got off the board at 215. And then I got the 831 print at 2 1/4. Obviously, that was the low of the day. That was probably someone that had a seller in their book and they just like, boom, printed them and took it straight up.
Wow, I should have been bidding that. I should have been betting that for 555. This is the hottest stock ever. Dry ships.
I see a high 6.
Everybody who's been holding for years is finally being rewarded. Oh no, they're not. Because they have like one share because it's reverse split on them so many times. Anyways, wow. I'm impressed. I'm impressed. Okay, so other news, imbalances just came out. Whoa.
Wait,
there's some selling.
Is Tops moving with it, I wonder?
Oh yeah, Tops is up 60% here too. It's a party in the dry ships sector there. The next biggest thing.
And it's lifting the overall market. The S&Ps are start to go green
all from
too.
Dry ships.
All from dry ships.
So if we have nuclear war, at least we still have dry ships.
Yeah, boy, oh boy, oh boy. We are green in the S&Ps 2030, 24, 37, 75, dry ships, saving the market here.
Saving the market's bacon.
I'm not even giving technicals on any of those stocks. I am not going to bring down the quality of the show.
They can go anywhere.
Oh, July CPI is up 0.1%. Oh, the Fed, we're getting inflation. That's good. So the market's trying to go up because they're of the inflation number.
The Qs are going green here now. Nvidia's down 8%. The Qs are going green.
Hey, I got
world.
I got Brentster and Brent, you with me?
Hey everybody.
What's going on?
Hey Dennis and Joel. Hey listeners. I had to jump on this dry ship stuff. So I just wanted to say that there are a bunch of other dry bulk shippers that are moving right now on this news. This has nothing to do with the sector. I wanted to just warn people out there that if you see one of these dry bulk shippers moving higher with dry ships, there's nothing fundamental about the industry that's changing here.
Okay, so anyways, what are these other ones? Tops, obviously, I've given on the show already. That's flying.
Yep. Diana Shipping probably should be moving on this one. DSX.
What is that one?
DSX. I don't see that one.
DSX?
Yep, I don't see that one a ton higher, but it is indicated a little bit higher. Tops is up about 65 cents right now, Dennis.
I know, Tops is up huge.
Let me see.
Short squeeze.
Globus, GLBS.
Keep giving them these two. Yeah, we're giving you. Look at the hot tips.
Euro C's, ESEA probably is moving on.
GLBS is up 30%. Euro C's, what is that one?
ESEA.
ESEA.
Yep, I don't see that one moving. Another one you can look at SHIP, SISHIP. This one's up. This is a 68-cent stock last night. It's at 84 cents right now. We have what else? Starbulk, SBLK. That one might be moving later. I don't see any move right now, but like I had to jump on it and warn people that there's no reason fundamentally about the industry that these stocks should be moving higher right now. This is dry ships news and only dry ships news, but you see how the sentiment changes like that.
Short squeezes.
It's crazy. Yep. It's crazy.
Scares everyone.
Yep, exactly.
And that's what you're seeing. It's up behind, but look here. We're already at 445. What was the high on dry ships? We're already like $1 off the high.
$6.
maybe I can say it's going to see $3 today too.
Quite a range. $6 on the button. It's at 440 right now.
Wow. Nice whole number. Great, Brentster. Great,
no problem.
Great fundamental information there. We really appreciate you hopping on.
Yeah, we like the sympathy portrayed. So, and thanks for that, Brent.
So short.
All right, so
short all
that's
that.
What's the hot sector here today right now is the dry ship sector here. The market's hot too. So like we said, shrugging off, we're shrugging off all this news here on obviously all this bad news here on the overall on Nvidia. I can't believe, that I come into this market. I can't believe that I'm talking about a Qs that have actually gone green here today. I would have never thought that Nvidia could go down that much and the Qs could go green. So very interesting market.
All right. Well,
all right.
You can short all those stocks while we grab our guest, Todd Sullivan, general partner at Rand Strategic Partners, and we'll be right back with Todd. All right, welcome back, everyone, to Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. We're on the line now with Todd Sullivan, general partner at Rand Strategic Partners. Todd, how's it going today?
It's going great. How are you guys?
We're doing good here in this wacky market here. Just the S&P futures did go green there and trading up 350. Tell us a little bit about Rand Strategic Partners and your investment style.
So I'm a value investor. Rand is a long short hedge fund that I've had since 2010. Deep value, small concentrated portfolio. Don't mind waiting a couple of years for our ideas to pan out, and with the expectations when they do, they'll pan out large, hopefully.
So in your analysis, you're just doing top-down fundamental analysis. Do you like to bring in any of the technicals at all? Once you decide, have your fundamental story, do you go to the technicals, or do you just hey, I like the stock, I'm all in a particular price? How much attention do you pay to the technicals?
I don't pay attention to the technicals, basically because of my time frame. I know a lot of technical analysis traders, and they're using that mostly for short-term trades. I'm looking at things that are going to pan out over a period of a couple years, and I don't know any technical traders that go out that far in their analysis. So I'm looking at more as, what's the current value of the company? What do I think it's really worth, and what could it be worth if a couple things happen that I think are going to happen? And if that spread's large enough that I'm investing, not really concerned what happens this week or this month or the next 2 or 3 months of the stock price. Fully expecting that I don't have perfect timing to pick a bottom. So if I think it's a value at 20 and it drops down to 18 or 17, I'm more than happy to pick up a little bit more, keeping that time frame in mind that, if I like it at 20, then it's even cheaper at 17, and hopefully it's worth 40, and I'll be very happy at the end of the day.
And what about, you said long short here, you have an equal balance 50-50, or depending on the market sentiment, how do you balance your portfolio, and how do you pick your shorts?
So I would say probably 95% long. It's rare that I have a short, and typically if I do have a short, it's because I think something awful is going on, or it's just something has a valuation that's so ridiculous that has no reason being where it is. That being said, shorting simply based on valuation, I've gotten burned doing that more than once.
Yep.
So I'm more than a little skittish to doing that.
All right. So you got a couple stocks on your radar that you are buying, and you are definitely going against the trend here. First, let's talk about Chesapeake Energy, CHK 414. Now, that's where it went off the board yesterday. Todd, give us the fundamentals in this stock.
So Chesapeake is an interesting play. It's not the Chesapeake of old, and Aubrey McClendon ran the company and was going on a land buying spree, paying whatever he could for land and running up the company's debt. They have a new CEO now, Doug Lawler. He's focused on correcting the mistakes of the past, fixing the balance sheet. He's selling off non-core assets, and he's paring down that debt. The company has done an amazing job lowering their price per barrel oil equivalent from where they were to where they are today. They're a big player in the Marcellus Shale. They're going to be cash flow neutral or positive sometime early next year. And should oil go to 50 and should natural gas go to 3, the company's cash flow positive. And they haven't been in that position in a long, long time. They kind of tie into my other two picks because there's a unique thing happening right now in the Marcellus Shale. And the problem in the Marcellus Shale in getting gas out of there isn't lack of demand or isn't end users. It's simply the gas is stuck there. There aren't enough pipelines to transport the gas, and that's one of Chesapeake's largest problems right now. It isn't that they don't have the gas. They just fracked a well in northeastern Pennsylvania that, from what everyone can tell, is the most productive well in the history of the state. They're producing gas and oil in increasing amounts every quarter. The largest problem right now is getting gas out of the Marcellus Shale. And the reason there's a problem is because under the Obama administration, FERC wasn't FERC, which is a Federal Energy Regulatory Commission, wasn't enthusiastic about improving interstate gas pipelines. They kind of sat on a lot of them, let a lot of them kind of sit there, kind of let the states run the show, and it's FERC's job is to approve interstate pipelines. As of this morning, Trump appointees are back on the FERC. FERC now has a quorum. So for the first time since Trump took president, the FERC will be able to approve this bottleneck of gas pipelines. And there are some massive pipelines in the Marcellus Shale just waiting for approval to be built. And if they're approved, which by all accounts they should be, and approved relatively soon, then you're going to see huge amounts of gas coming out of the Marcellus Shale. And those producers in the Marcellus Shale who are struggling to get their gas out of it right now are going to have that problem solved. And that falls into my other two picks too.
All right, before we move on here, what about the debt? I mean, that is, you see what happens. There's a lot of different, companies straddled with debt. From the chat, they're asking about the debt. Could you touch on that, please?
Yeah, so the massive debt, and this is the hangover from the McClendon years, you could call it. Lawler's paid down a huge amount of debt. They're looking at some non-core asset sales this year that are going to pay down another $2 to $3 billion worth of debt. When they do that, they're in a comfortable spot with it. They'll be cash flow positive, barring a complete collapse in energy prices. And I'm not someone who thinks energy prices are going to collapse on us from where they are. I think the risk, if there's any risk, is that they spike upwards, not down. So a risk for consumers, I guess, not for the companies that produce the stuff. But yeah, that's why the stock's trading $4. But they are paying it down slowly but surely. They're paying it down. Interest expense is coming down. So as they do that, the stock's going to revalue. People are going to look more at whether they're making off each barrel of oil they produce and how much gas they produce. All those numbers are going to flip from cash flow. Right now they're just under cash flow neutral. They'll be cash flow positive probably next year. Should they accelerate the asset sales? And could they get a good price for them? That could be as early as Q4. But that's all kind of a timing thing, though. So, and then the debt becomes less of an issue. So Lawler's done an amazing job at cutting costs in the company, getting rid of the company's incredibly land rich, and they're going to sell a lot of that off, and that'll take care of a lot of the debt problem.
Spice is asking here a little bit about the fundamentals and what about the daily gas line protest and environmental groups that, are against that? I mean, do you see that, being a contributor factor to its decline, and how will it be resolved?
I think I think we're to the point where that now it's a cost of business. If you're in the energy space, you're going to deal with protests no matter what you do. And the truly ironic thing about all the pipeline protests and all that is, by every measure, transporting oil and gas through pipelines is the absolute safest way to do it. There are less accidents, less spills via pipeline than via boat and via train and via truck. It is by far, and no one has ever argued against this, it is by far the safest way to transport oil and gas. Now, the environmentalists just don't want us to use oil and gas. Well, that's just not realistic on any measure. There's absolutely no way renewable energy in the next 50 years can come close to satisfying energy demands of the world. So we need oil and gas. So if we're going to use it, if we have to use it, why not transport it the safest way possible? That's via pipelines. So it's kind of it's an odd argument they have, that they're protesting against the safest way to use something, but it's a cost of business. Every company goes through it. Every energy company is dealing with it. It's kind of baked in, I think, to a lot of the companies. That's why you don't see energy companies trading at 45 PEs, because of this cost of business. There's nothing facing Chesapeake that any other company isn't facing. There's no massive lawsuit that might go against them or anything like that. Okay. So it's something you just kind of roll with.
All right, let's talk about two other stocks on your radar, probably in the same sector here. Williams Companies. This one has had a really nice rally from 28 to 32. Nice 4-point move, getting a little 50% retracement here. Give us your fundamental analysis on Williams Companies.
So they had a big spike in the dividend this year. It's a very similar situation to Chesapeake. Predecessors, large amount of debt. They had a failed merger last year. The company called it off when oil prices collapsed. They're doing the exact same thing. They're paying down debt organically. They're selling some non-core assets. Their dividend now is solid. They increased it, I think, 60% this year, and they're going to increase it 10 to 15% every year following. These pipeline companies are trading well below historic multiples. The nice thing about Williams, it's a C corp, so you don't have a lot of that MLP tax garbage that people have to deal with a lot of stuff, which is something that I like, especially if you're going to hold it in a 401k or a tax deferred account, something like that. But they're doing the exact same thing. They have the Transco pipeline, which is just a monster pipeline going up the East Coast, and they're going to be a major, major beneficiary of the FERC quorum, as they have several large projects right now that are kind of sitting, waiting for FERC to give the go-ahead. And FERC hasn't just been able to give any go-aheads for months because they've had no quorum. So I would watch the news coming out of FERC, watch the pipeline approvals, and I think Williams, especially with their Marcellus access to the pipelines, their pipelines to the Northeast United States, which is starved for natural gas, paying rates 3 to 6 times, depending on the time of year, what they pay in the Midwest for natural gas, not because it's not there. They sit on top of the largest natural gas deposit in the country, maybe the world. It's because they can't get the gas out of there because of pipeline constraints. So Williams is going to be a major.
That 4% yield, that you're confident that yield is safe?
Oh, it's well covered, and by all indications, they'll be increasing that next year too.
Nice. Not only covered.
I think the major holdback with these pipeline companies is that they have a massive backlog of work that they want to do that they can't get done because they're waiting on FERC. Now that FERC, as of this morning, has that quorum, I think you're going to see that logjam break, and these companies are going to start busting out of these projects, and you're going to see results in the next year really take a jump for them.
Your final pick here is Kinder Morgan. Had a nice bump over $21, now filling a gap from early July, trying to find support here at the 1930, 1940 area. Give us your take on Kinder Morgan, symbol KMI.
So Kinder Morgan basically dominates the Houston Ship Channel, exports to Mexico, which are surging for natural gas, and the central U.S. And they tie into, if you own Kinder Morgan and Williams, then you control them, or you have the majority of the gas in the United States going through the pipelines and companies you own, from basically Maine to Colorado. And Kinder Morgan is interesting because they cut the dividend surprisingly a couple of years ago when oil prices collapsed, and they have committed to raising it 60% next year, and then more than doubling it from where it is now in the next 2 years. The stock really hasn't reacted to that, and I think Wall Street's more of a show me you're going to do it, because you kind of cut it 2 years ago and surprised me. So I'm not convinced you're going to do it until you actually do it. So that's why the stock is so cheap, despite the fact they've committed in Q1 next year, to raise the dividend 60%. If you look at Kinder Morgan, they're trading at about a 10% yield to distributable cash flow, which is unheard of in the industry. Basically, that's twice what the industry is getting. So their stock could almost be a double, and then they'd be trading at the same valuation as a lot of their peers. They're doing the same thing a lot of the companies in the space are. They're paying down debt organically. They're not issuing more securities to do it. They're not issuing more debt. They're either extending maturities, refinancing it, or selling some assets, or paying it off with results. They're growing with cash flow. They're not using debt for new projects. So it's a really interesting play. And I think once Wall Street believes that they're going to increase this dividend and that payout's going to go way up, then I think you'll see the stock react too. And that, that all indications that should be for Q1 next year. And so you're looking at maybe March or April. They announced a 60% dividend increase for the year, and it's going to be payable evenly over 4 quarters. I think you see the stock react to that too. So right now you're buying a 10% yield.
What about Encana? Encana, ENCANA. Do you follow that one?
I don't follow that one. The other one I'm looking at is Enterprise Partners, ETP.
Okay.
That's another one that's very interesting. They have a fantastically high yield, almost 10, 11%. That's almost too good to be true. So I just started digging into that lately. You know what I mean? Typically, you don't find that kind of a yield that doesn't get cut or something like that. So, and I don't think Wall Street believes it is, which is why the stock is trading where it is. So either one or two things are true. Either Wall Street is really right and it should be that low, or it's really wrong and the stock should be about a double. So you have a couple outcomes there. So that's another one I'm looking at.
All right, doing your research. Todd Sullivan, he's a Massachusetts-based value investor and a general partner in Rand Strategic Partners. Todd, thanks a lot. We talk a lot of technicals. It's always good to get a fundamental outlook on the market, and we'll certainly keep an eye on the stocks you mentioned today. Thanks a lot. Have a good weekend.
Thanks. You too.
All right, S&P futures staying green here, up $2 at 39.50. Your pre-market high is 24.42. Dennis, any changes in imbalances?
They're very large to the sell side. So obviously one of two things is going to happen. Some of these sell imbalances are going to have some buyers that come in, some institutional buyers are going to offset these, and these are going to go to buy imbalances, or the S&P futures are going to come in because there's an arbitrage opportunity if it stayed like this. Right now I'm looking, just to give you some examples, Bank of America, 424,000 to sell here right now.
Wow.
JP Morgan, 103,000, Citigroup, 111,000 to sell. The financials are a little bit weaker. Maybe, it's the number that just came out, but I did see, the financials start to get hit a little bit on that 830 number. Coca-Cola, 107,000 to sell. That's significant for Coke. Alibaba, we've been talking about it. We're having the buying balances forever, and now, the last couple of days, selling balances. It continues. 161,000 to sell here in Alibaba this morning. So that is significant as well, and that is important to consider when you've got this market here, obviously, trading as actively as it is. And you've got, Qs that just went green, but Baba's still trading down. Baba lost $5 yesterday. So,
yeah,
and it's been one of the darlings.
Yeah,
so.
150 to 160 has been that issue. Let's see what your all-time high is. You peeked your head over 160 one time, 160.39, and then struggled to get there, and a couple other pops up. I'm keeping an eye on the double bottom under 150 here at 149.10, 149.60. The financials are getting hit. That economic report that came out at 8:30.
They're coming back, though.
Yeah, inflation remains soft in July. Shocker. What are the implications there for interest rates? Not good. Perhaps I'm not going up as much. Not good for the banks. Dennis, do we even need to talk about ratings today? I mean, and they with so much volatility.
No, if you want to give us a couple highlights, Spencer, but there was nothing really jumping out to me that was like, whoa, check out this rating or analyst change.
Yeah, I'm with you on that. Honestly, I hadn't even looked in like an hour because there's been so much other news happening. But nothing. When I had looked, nothing jumped out to me. I'm back in it now. Walmart upgraded at Stevens to overweight. Let me see. It's mostly just earnings, follow through after that, chasing price. Let me look further down. Anything big downgrades jump out to me? HSBC downgraded Goldman from buy to hold.
Seems like when the big brokerages just get downgraded by their analysts that they don't even really respond to it.
Yeah, nothing really aside from that. That's it.
Yeah, just an update here. Dry ships did hit $6, back at $4. The Brentster coming on.
It's wild.
Yeah, the wild west there in dry ships. Dennis, I just want to ask you. We had Todd on. He was talking about his plays, his long-term plays here. Sure. I mean, you getting any interest? I mean, we talked about oil the other day.
I did buy some more XEG, which is in Canada. So I have been nibbling into some of the oil stocks in my long-term investment portfolio. Just because I've been underweight oil for so long, I figure I'm trying to bring my exposure back up to maybe a normal level, even though I'm probably still too underweight oil right now. But yeah, so I've been nibbling over there. I mean, it's hard. This market, has a lot of worries right now. I'm not coming here and jumping in and buying stocks because we're down 2% on the S&P. because, and now we're only down 1.5% because we're bouncing back a little bit this morning. It's hard to come in here and be a buyer simply because there's so many other worries out there. I'm not coming here actively shorting it, but I'm not coming here and sticking stuff in my invest portfolio. Now is not the time, unless you're going to get some significant sell-offs here in some of these good names, and you're going to get them at discount prices. But I mean, Nvidia is still trading with a high multiple here. It's, yeah, you can say, okay, it was a great deal. It's down $10 this morning. It was 170 last night. It was a good report. Maybe it is. And I've been saying I think it could go to 200. I still think it could do that, but valuation is just an issue for me on a lot of stocks. So there's just not a lot out there that's like, oh, this stock is cheap, I want to put this in my investment portfolio. I did buy some Virtue Financial a couple days ago there on the weakness, and I'm obviously happy I did that because the stock has come back up, and it's more of a VIX play. VIRT is going to do better, in the VIX. So there's a couple stocks I've been nibbling in my investment portfolio, but overall I'm pretty tame there right now, just because I'm so concerned with the political uncertainty.
I had this, I scribbled this down and I let Todd go before I asked him. I just, where does solar come in? In his, his factor in the gas/oil plays here. I mean, I don't know. I mean, if that's, he obviously thinks it's just looking at the balance sheets, looking at the potential profits. But, one thing, that's why I like long term, sure, oil can get pops to, whatever, 55, maybe someday we go back to 60. But to me, there's a trend. Electric cars, the changes in uses of energy and the production of energy
makes something to consider.
Yeah, makes me a little bit cautious on those
We're probably going to be less dependent on oil. Like my buddy who's a mechanic thinks everybody's going to, the recycled oil, where they're taking oil and they're recycling and reusing it. And he says he believes it's better for the car. I don't know, like I'm not a mechanic, so I don't know, but he's like, it's cleaner. Once they recycle, they've cleaned it again. He's like, they cleaned it the first time, they cleaned it again. So he's a big fan of the recycled oil. If you can start recycling the stuff and reusing it all, and there's, somebody that comes to his garage, he's got a shop, and they come to his garage every week and they take all the oil, or every couple of weeks, and they get all the oil and they go and they clean it and they reuse it. If you can start reusing the stuff, maybe that is a thing against long-term, demand, and obviously cleaner sources of energy. If you just take a ride across the border and look at Canada, you go, just from Detroit to Windsor, you go about 20 miles east of Windsor where you get to Tilbury, all you see are huge wind turbines. They are everywhere. And, Ontario's went full on trying to go clean energy. There's thousands of these things, and they're like millions of dollars to build each. But there is, huge. They're 350 feet high. It's pretty cool to look at, all those wind turbines, and they've obviously got the solar programs that they've, have in Canada. I participate in that as well by putting solar on my dad's warehouse. They pay you for that too. They're trying to go clean energy. So there's a lot of reasons to think that, oil itself could actually be down for a prolonged period of time. So it's hard to get bullish oil with so much of the world changing.
All right, let's before we wrap up here, Fuzzy's asking about AT&T, and let's just do a quick technical on AT&T and Verizon. Both had great pops off their reports and are very, very stubborn to give it back even in a weak market. AT&T clinging to $38 area, so as long as that holds, that looks pretty good. And Verizon, to me, it's just they're not begging to fill the gap here. That's just holding 47.85. That was low you had a few days ago. So in order for more downside, Dennis, nice yields in these stocks.
Up way too much. They went way too. Verizon's run was absolutely ridiculous. 43 to 49.5. It's still up here at 48. The deal was, and I always say, be a contrarian investor. This just rallied $6 here. We just rallied $6 on Verizon here over the course of a few weeks. That is a huge run for the stock like this. Everybody hated 43. Now they're going to start loving it at 48, 49. It's just, they're doing it backwards. So I think, it's got to come in before I get interested in Verizon. Again, I own AT&T in my long-term investment portfolio. I like it down at 37, 36. 38, it's a relatively cheaper. Verizon had just a lot bigger run than AT&T did. So if you was saying which one would I rather have, I'd rather have AT&T just from the charts perspective because it doesn't run as far. But either way, these stocks, just had a little bit too much too fast there in the last couple of weeks.
All right, Spencer, let's wrap up today's show and let our listeners know what's on the docket for next week.
I can't believe not only was Dennis bullish drive, but he wasn't bullish enough. Unbelievable. What a morning. So as far as next week,
I said $5.
Yeah, it went to 6.
Now it's 4.
Now it's 4, right? Okay.
I can't call the whole, pattern of trading in the pre-market.
No, apparently you cannot. That's what we'll learn today. Anyway, as far as next week's show, good set of guests for you. Tracy Reiniak from Zacks, Joe Malandrino. She's a reporter now with NASDAQ. She'll be joining us. Has been on in a while. Jonathan Corpina from the floor of the New York Stock Exchange. Jeremy Schwartz from Wisdom Tree. So a good slate for you on the docket. That's just some of our guests that are on the slate for next week. So as far as our show from today, you can catch it again as it aired on youtube.com/Benzinga TV, or the podcast is on iTunes, SoundCloud, and Stitcher, and soon to be the Google Play Store if you get your podcast there as well. That's it for our show today, though, and for this week. Hope everyone has a good rest of your day and a good weekend. We'll be back with you folks on Monday.
All right, Spencer, good job there. Sorry if I did it.